In yesterday's video, we ended the video talking about the Swiss franc and how the move up against all the currencies has caused it to deflate. And I said it had implications for the global markets. So it's interesting, a couple of my commentators, I believe on TikTok, said, well, what about the $1 trillion SNB balance sheet? And then it dawned on me that, I have made videos on this before. And so now I pinned it on TikTok at the top. And in the end, believe it or not, the situation is even far more complicated than we can even imagine. And we can talk maybe about the implications to the global economy. So first, in the video that I'm pinning, and I'll pin underneath on X and Blue Sky and on YouTube, the first third is about UBS. And this is last year when it became apparent that the government of Switzerland is very serious about increasing the capital requirements for UBS. And it just happens, I was watching it last night, guess what? Friday is the vote, okay? Now in Switzerland, they literally vote on these things. It's not like you send it to your government and they make the decision. No, the populace votes. And right now, it seems, I'm no political analyst, that these things are gonna pass against what UBS wants to happen. And I think the market feels that way. European banks are up around 40%, UBS is down 3% for the year, okay? Now, what the second third of the video about is about the QE of Switzerland from 2013 to like 2018, somewhere around there. Now, during this period of time, every government in the world did QE. And what's QE? You print your currency and you buy your own bonds, all right, to lower the interest rates and give liquidity to the markets, okay? So forget everybody else. During this period of time, the Swiss printed about $1.1 trillion, all right? Remember that. Now, the only difference is there's only one central bank in the world, the Swiss central bank, that said, if we print the Swiss franc and then go buy our bonds, we will have negative interest rates, and we do not want negative interest rates, okay? So what they decided to do was they decided to go out and buy stocks and bonds in other currencies around the world. So $1.1 trillion of the Swiss government's money are in stocks and bonds around the world, okay? Now, in America, we felt the same way, by the way. We did the COVID and everything. We did not want our interest rates to go negative. So, again, the Fed, firemen come in, they create the reverse repo facility. And what we did was we just said, look, whatever the market rates are, we're gonna pay 0.5% more, all right? So that everyone was incentivized to give the money into the RRP and not buy our treasuries. And by not buying our treasuries, our interest rates didn't go negative. That's the way we did it. We hit up around $3.6 trillion in the RRP. Now it's less than 200 billion. Now people think that's a negative. I think the Fed actually did a great job, okay? That's just my opinion. So, now in the video from January on the Swiss, I'm comparing against the euro and also all this stuff that doesn't matter anymore, okay? I realize that, but still, I put up the video for you to listen to. Now, think about the world today and what are the Swiss gonna do? So the Swiss franc is up, and one of the things that I've noticed during this run since, Liberation Day, we have not heard that the Swiss have gone in and moved against their currency, sell their currency, okay? So, and the way you do that, of course, is you sell the Swiss franc, trying to drive down, trying to contain it, right? So what they've been doing is just lowering and lowering and lowering the interest rates until now, on the short end, they're negative, okay? So that people won't buy the currency, but they haven't intervened. And so, again, we've never done this before. I'm guessing, I'm just pointing this out. How do the Swiss do this? they have 1.1 trillion in other people's currencies. So if they want to bring their money home, they have to sell their stocks and bonds, 1.1 trillion in all these stock markets and bond markets around the world, bring the money back, buy the Swiss franc. How are they going to buy the Swiss franc? It's already up. They're going to drive it up even higher, okay? What are they going to do? So what normally would be considered a reserve for the country, for Switzerland, it's just another bullet in the gun, right? What are they going to do now that they have the money out of the country in another currency that they don't have control over? And what have we been talking about here almost on a daily basis is what is everyone going to do with all their currencies, right? So how do the Swiss get their money back so they can then help themselves with their currency and their interest rates and their economy? What do you think? I want people, to comment on that. Now, I want to go right back to this UBS for a second. After the great financial crisis, all the countries noticed right away, if you said, I'm JP Morgan or I'm Deutsche Bank, everyone kept all their capital, even though they're in all these countries around the world, right? These banks are global banks. They have assets and people and everything all around the world. They kept all their capital in one spot. Deutsche Bank is in Germany. JP Morgan's in America. UBS was in Switzerland. So all these other countries were like, after the great financial crisis, that's BS. You have to keep capital in our country against your subsidiary, all right? So now the Swiss are saying to UBS, listen, if you have $100 in America in capital against the UBS subsidiary, we want you to keep 60% of that 100. Now there's $60 of capital here in Switzerland. And the reason being is that if everything goes up in smoke, the United States is going to take that money, and if they're in Brazil, they're going to take that, and whatever country they're in, they're all going to take that reserve, and thereby there would be no money left in UBS in Switzerland. So they're saying, no, you have to, wherever subsidiaries you have, and however much capital that you have there, 60% of that you must now add additional capital to UBS in Switzerland, which comes out to about $25 billion, according to everyone who's talking about this. So whether it is or not, I just don't have the wherewithal to figure that out. But everyone says it's 25. So don't look at this as 25 billion. They have a $1.7 trillion balance sheet, 25 billion. So what you have to ask yourself is, what are they leveraged at? Are they leveraged at 10 times, 15 times? They're leveraged at 10 times. That's $250 billion that they have to pull down, sell of their balance sheet. And if they're 15 times, which they probably are, if not more, that's 400 billion. So here you are, you're making revenue and risk on 1.7, and then you have to change it over to down to $1.3 trillion. Obviously, people are going to get paid less, the stock price, revenue, everything comes in. Banks safer. It's in the best interest of the Swiss people. It's not in the best interest of UBS. So what is UBS going to do? Now, they're already saying that they might have to get rid of subsidiaries. UBS's corporate strategy is to kind of create another Morgan Stanley, the wealth management plus the investment bank. But the wealth management division's in America and in Asia. Asia is the biggest in the world, and especially for UBS. So UBS may be forced to make a choice where they sell America, just not to have the capital requirements, and then bet on Asia and the investment bank. Now, I don't know what's going to happen, but the Swiss, what do they do? I mean, how do they get their money back? What do they do? Like and follow and tell me in the comments. Thanks a lot.